What if I told you that much of XRP's future supply is already spoken for, and the market doesn't even know it yet? Strap in, because this could flip everything you believe about XRP's value. Before we dive deep, make sure you hit subscribe. You don't want to miss this. For years, XRP Pre-Allocation was dismissed as conspiracy theory, whispered on forums, but never confirmed. Today, I've got brand new evidence that it could actually be true, and I'll show you exactly why institutions might be quietly securing claims on locked XRP instead of buying it outright. In short, if you could just take custody of the XRP, why would you bother with pre-allocation rights? Because doing things this way gives institutional players access without immediately flooding the market or triggering custodial regulatory headaches. Take the example of Ripple Labs CTO David Schwartz confirming that Ripple could sell the right to receive tokens released from escrow, or even the account the escrow completes into, while those tokens remain locked until their release date. This means a financial institution worried about custody or regulatory exposure might enter an agreement today to claim escrowed tokens in future, rather than hold XRP now and worry about balance sheet impact. Couple that with public statements that investors like Greg Kidd have negotiated options for up to $1 billion XRP, and you start seeing a credible institutional path hiding behind the scenes. Now, let's talk about the future of XRP, because pre-allocation matters part of the story, not the whole story. Recent developments show that institutional adoption of XRP is accelerating. One Japanese-listed company bought about $17 million in XRP while aligning strategy with its financial services major shareholder. This signals more than retail hype. It points to balance sheet decisions. Moreover, the XRP ecosystem is shifting focus toward institutional use cases with privacy and compliance built into the future roadmap. For example, the XRP Ledger team is working on zero-knowledge proofs and confidential token support so that institutions can transact on-chain with privacy and still meet regulatory needs. What does that mean for you as an investor? First, supply could be tighter than we think. If large blocks of escrowed tokens are already assigned via rights, they're not being actively traded, and that lowers the effective float. Second, timing matters. If institutional claims convert to actual holdings when regulatory clarity hits or custody solutions mature, you could see a demand surge relative to available supply. Third, the narrative around XRP isn't just retail or crypto-native payments. This is about bridging real-world assets, tokenization, cross-border liquidity, and settlement rails. That gives XRP a structural use case beyond hype. Of course, there are risks. Technical analysis today shows short-term consolidation, with models suggesting XRP may consolidate between about $2.35 and $2.70 unless a breakout occurs above key resistance. Fundamental indicators show institutional flows, but locked supply and regulatory timing mean upside may take time. Yet the long-term scenario remains intriguing. Some models envision XRP reaching $3.50 to $4.50 in 2026, $8 to $10 plus by 2026-2028, if adoption scales and the supply side remains constrained. In conclusion, don't dismiss pre-allocation as merely theoretical. It's gaining real evidence and institutional relevance. Combine that with privacy-first infrastructure developments, increasing institutional buying, and the potential for supply shock when rights convert to holdings. And you have a recipe for a deeper, structural narrative shift for XRP. Stay patient, watch the support line, track institutional flow, and understand that the most significant moves may happen quietly before headlines hit. Thanks for watching, and I'll see you next time with more updates you won't want to miss.